Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in and take a look at the Bitcoin daily analysis, remember this is for entertainment only and not to be considered as financial advice. Additionally, when you feel value has been added, feel free to smash the like, ring my bell, hit subscribe if you haven't, and also share your thoughts. And also share my videos and analysis with your loved ones. Let's dig into the news first, and we'll take a look at the charts. So in the news, Bitcoin shows red flags as whales sell en masse. And this is according to an article in a crypto briefing. I mentioned some of this already yesterday about how the leverage ratios show more potential corrections coming, and also how the and Bitcoin's whales with 10,000 or more Bitcoins are selling. So if you want to read that article, check out cryptobriefing.com. I would include a link in my Twitter thread for this video. Also, Bitcoin will hit 100K in 2022. That's this year. This is according to Celsius Network CEO Alex Machinsky. I like Alex. I love what he's doing with his platform, but I so disagree. Alex is a smart man, and he's very generous with his Celsius platform, and but he was wrong in 2021. Was it 2021 or was it 2020? I think it was 2021. Yeah, it was. Yeah, he made the same prediction in 2021, and obviously it didn't happen. And so he's making the same prediction, and I so disagree with him. Bitcoin will hit 100,000. That's not a matter of if. It's a matter of when. I just don't think 2022 is it. It may not happen in 2023 either, but for sure not 2022. We have a lot of headwind against us. So take that for what you will. The Cash App and Shivo help drive Lightning payment volume up 400%. I think the Lightning networks is fantastic for Bitcoin and to be able to move money quickly and cheaply. So it's growing in adoption, and that will help give the mass more exposure to Bitcoin and crypto. So that's positive news for adoption. An article in Bitcoin magazine talked about over a third of Nigerians are invested in Bitcoin and crypto. If you take a look at all the developing countries that are investing in crypto, the Vietnam, India and Nigeria are some of the top countries investing in crypto. So it came as no surprise. And this came from KuCoin. They conducted a report with multiple surveys that showed 35% of adult population aged 18 to 60 in Nigeria are invested in Bitcoin and other cryptocurrencies. So the investors class largely made up of youthful population driven by Nigeria's median age of 18.4 years old, which leaves 52% of the investors being below the age of 30. So I think if I look at my data for people who view my YouTube channels and Twitter, the bulk of the population are roughly in the younger age, mid 20s to early 30s. So it's no surprise there. I've had in my previous career in the banking industry, I've had opportunities to work with some people who immigrated from Nigeria. Some of the best employees. Love working with Nigerians. Super intelligent too, and extremely good work ethic. I was very fortunate to have had that opportunity. Additionally, a Brazilian Senate announces an incoming approval of Bitcoin law. This is according to Cointelegraph, and what this article is about. They talked about how Nigerian Senate is planning to approve the Bitcoin law, allowing Bitcoin to act as what is it? Same thing with like in El Salvador as currency. So that's really cool. It's interesting to see how developing countries are more flexible and open to cryptocurrencies being like a mean of regular currency. So that's really cool. But the more developing countries are more resistant. Interesting, huh? I wonder if banking has anything to do with that. All right. Anyways, let me close up some of these so I can get to the charts here. Let's get to the charts. So here we have the current crypto market. Bitcoin 39.9 roughly, moved up slightly. Dominance 40.80. Ethereum 3,000 roughly. Dominance 19.54. Everything else is almost everything else is in red. Doge, except for Doge, Leo, and a couple other ones. But yeah, today's been a horrible day for crypto. Let's take a look at the market cap. Market cap $1.85 trillion, down 2.89% day over day. And here we have the trading view chart. Let's maximize it up. This is a daily time frame, and you can see the current daily candle is bearish, and it's near the bottom of the Bollinger Band here. Currently, it's 39.9 still. And what has it been doing in the last 4 days? Basically, it has pretty much erode the support line here, the white dash line here, and that's part of the ascending triangle. I know it doesn't look like an ascending triangle, but I'll show you if we zoom out. Here's the top resistance line. Here's the bottom ascending support. I know it doesn't look like much, but let me zoom out here. There we go. So yeah, it's been riding this this support level, literally. Like the wick would come down past it slightly, 3 times out of the 4, but it came back up. And what's so, you know, something just makes, you know, I analyze these charts every day, but it's just certain patterns, just like, what, really? That's pretty cool. Anyway, so it's chopping. The bottom of the candle is basically right on this support line, and the top is going above the 41K resistance line here, this reddish dash line, but it falls short of hitting or getting near the 50-day moving average, which currently is at 42K right now. This pinkish red line here. So here's the 41K line, came up above that and pulled back down. Right now, it's literally, the price is right there at just above the ascending triangle support. So yeah, it's going to be going this way for a bit. If it breaks below this support line, this ascending triangle support line, that'll be bearish. If it breaks above the 50-day moving average, it's going to be a more bullish. But remember, when it falls below the basis line or the middle line, the Bollinger Band, this blue line here, it can remain down there for 10 plus days. And it's currently on its 9th day. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days. So I mentioned that when it first dropped down here, and it's proving to be true. So if you want to trade the range, for example, you can mark the bottom here where this support. That's where you would buy and you would sell roughly around 41, at least a tiny portion of your Bitcoin, and just trade the range right there, and you make some percentage, about 3-4% on a probably daily basis. Again, that's not financial advice; it's edutainment. So let's go down to the volume here. The volume is dropped back down below the moving average here, this red bar here. And let's take a look at KDJ. The white J line was curving up. It looked like it was going to cross above the blue K and the red D lines, but no, it literally touched it and then went right below it, like hugging, like they're like hugging together, all three lines. So different. And there's a slight descent right now, and it was at 9.8 when I did this chart. It's currently at 11 right now. You can see that here. So it's bearish because it's descending, but more crabbing sideways. So you got a bear and a crab here. MACD is rounding the bottom below the red line at negative 630 when I did this, and it's printing its 10th consecutive bearish, though lighter histogram bar. It's shorter too, so I gave that a bear. The red RSI, blue CVD, and the white momentum indicators all flip back down after rising 2 days in a row. They're all flipping down, and the red RSI is was at 38.38. Remember, 50 is the middle mark, and the start of the bottom is 30, and the top is the start of the top is 70. So it's more towards the bottom right now. So the blue CVD line flipped down to 1.812 million. Give that a bear, but look at where it's ranging right here. So it's ranging kind of towards the bottom half, because the top's up here. Here's the bottom, so nearer to the bottom half. But the key you got to keep in mind is that, you know, it's not quite at the bottom, so it's still got room to move to descend down further. And if it did that, it'll drop below this support, the triangle support. Momentum indicator, the white line here, flipped back down to negative 6,746. I gave that a bear also. So what are we seeing here? We're seeing bearish pattern here on MACD. We see a descending KDJ here. It's not penetrating above, but it's still below, but really barely below. You got three indicators down here being bearish. So altogether, it looks very bearish. And that's, you can see that in the larger candle body here. Notice these two candles here, these two previous daily candles that were bullish have smaller bodies than this one. So well, I think it'll continue to ride along in this area and chop. It'll chop between the triangle support here, roughly around 39.8, and probably chop just above the 41K line, but falling short of the 50-day moving average. So it'll chop there again. But if it breaks below, that's bearish. If it breaks above, that's bullish. All right. So overall, the chart remains with two crabs and a this is more like a bear, not a bull. What's going on here, buddy? I think it's more bearish than bullish. Oh, I know why. Yeah, I think because of the ascending line. I'm just going to remove that. I think it's kind of more crabby than anything else. Yeah, it's going to be more crabby. All right, let's take a look at some charts here. Open interest, I would save you the time. All four are showing 42K for the 15th, the 16th, 22nd, and 29th. And some dates we want to pay attention to are high volume and high open interest. Again, volume is our volumes are contracts that have already been closed, and open interest are contracts. These are for calls and puts for options, Bitcoin options. And open interest are contracts that are still pending and open. So we have high volume on the 22nd, 29th, medium volume on the 15th, but not a lot of open interest left on the 15th. Very little on the 22nd, but high open interest on the 29th. So 29th would be a good day to expect max pain to reach its price, which is around 42K. So it won't change that much. But if you know that, and let's go back to the chart for a second here, 42K would be roughly right where this is where this 50-day moving average is, right? It's pretty cool. So if it's going to come true, what you can do is trade the range in the meantime around 39.8, 0.7K, buy there, sell up at around 41, just above 41 slightly, save some, sell some at 42K, and you can trade the range, so something you can think about. Heat map, here are sell walls on top. We got 50K, 48K. This one just came in at 42K. Interesting, huh? All these numbers, they kind of like come together. You got 42K moving 50-day moving average, and here's the 42K wall. Huh? Weird. 42K max pain. You see how they all fit together? All right, let's drop down below and take a look at the buy walls. We got 39K here. We got 38K, 35, 32, 30, 30, 25, and there's another one down, a little one at 20. And notice the cumulative volume delta. This one basically describes market demands, like market buys and market sells. What that means is, instead of you like putting a limit buy where it just stays in the book until the price hits it, this indicator shows that people who are just buying at market price are selling at market price. And currently it's pretty decently aggressive buys right now overall, at least an hour ago. Here's the liquidation levels map from High Block Capital. It got reduced here when price moved up. Shorts got liquidated, and then as price moved down, they grew back like mushrooms. Currently at negative 3.44 billion on Binance alone. Negative means just is excess shorts, and these levels here are all 25x to 100x leverage. Down below we have long leverage positions, and up above we have short leverage positions. This redness here, that's the money in the high leverage short positions minus the money in the high leverage long position. You can get that the difference, and that's here. 3.44 billion. 3.44 billion is not it's not quite where it can influence price. Around 5 billion, that's where whales or smart money can influence the spot market to win their high leverage positions in this in the perpetual futures market. So we're not quite there yet. And that takes us back to the beginning. I appreciate your time. This is my second video for the day, and my last one will be with Ethereum, the Ethereum weekly analysis. So that's coming up after this. I appreciate your time. Feel free to smash the like, ring my bell, hit subscribe if you haven't, and share your thoughts and share my analysis. And that's pretty easy to understand with your friends and family. Peace.